We're going to bring in Michael Santoli, senior editor of Barron's, and stay with Anthony Mason as well. Thank you for being here to both of you. And Michael, what's shocking to a lot of people, especially when they look at this market, they say jobs are growing here. They grew in the month of April, as Anthony reported. Why isn't the market responding more positively to news that we've been waiting for the last 4 years?
Sure. Yeah. The main answer is the market was up about 80% from the low of March of 2009. The market anticipated that the economy was in recovery mode. We've had one of these pullbacks of about 8 or 9% in the market in January and February. It rebounded from there, stabilized. I would expect probably before very long we have something similar, but the market runs ahead of the actual economic data.
The market is always trying to anticipate the future. Some people say 6 months out, some people say 9 months out. But the future, Anthony, as we know, as far as the job picture goes, it's improving, but it's going to take a long time before it gets back to normal.
I think, but one thing these numbers show is there was greater strength there than people thought. And I'm hearing from more and more economists that they think that the job recovery is going to pick up some speed here. It's not going to be a runaway train. It's going to take years to get back the 8.4 million jobs we lost. But we're starting to see some momentum.
And to that point, Anthony, there have been statistics out. For example, the Atlanta Fed came out with a statistic that we will need to add 200,000 jobs every single month for the next 12 months just to bring the unemployment rate, which is now at 9.9%, down by 1%. That would mean 5 more years, Michael, until we see normal job picture in this country.
This is similar to what happened after the early 80s recession. It really took a very long time for unemployment to get down to a level we would consider tolerable. But when the trend is in the positive direction, the economy can reasonably do well, and people feel better about it. Even if it's not low unemployment, if it's lower than it was a month ago or 6 months ago, people generally respond okay to that.
And to your point, confidence in this market is a very important thing. Confidence in the economy, Anthony, is an important thing. How significant is it that we see these protests in Greece, that we hear that things are breaking down in Europe right now? How significant is that to the U.S. picture?
Well, I think it's obviously affecting the stock market. It's a big part of what we saw this past week. I mean, there is no clear stability in Europe right now. We don't really have a government in England. We've got elections in Germany this weekend. And, you know, generally we're trying to get a solution in Europe, and it hasn't appeared yet, really. So that is undermining confidence in the stock market.
Well, and as far as the solution in Europe goes, frankly, what's happened in Europe, as what's happened in the United States, is that we had a debt problem in this country. Things started out bad because we as consumers were taking on too much debt. Well, now the debt has shifted to the hands of governments. How does that shake out? How does that situation work in your view, Michael?
Well, that's the fear here, that it becomes obviously a chain reaction, that Greece cannot meet its debt and it goes to Portugal or Spain. Now, I would point out that often this happens when governments get into debt problems. In 1997, you had the emerging markets in Asia that had a debt problem. We thought it was going to spiral around the world. It didn't. The fear here is that we have a fragile recovery. The financial system isn't fully up on its own 2 feet, and therefore we have to worry about who is the lender of last resort. And the governments have already gone all in to fight the recession with their own debt. So it's definitely a concern, but I do think that they're going to create a fire break here, and ultimately the European Union will bail out Greece and probably calm the waters a bit over there.
Anthony, we saw this free fall earlier this week, the 1,000-point drop on the Dow, which eventually rebounded. How long do you think it'll be before we have a clearer idea? I mean, I'm hearing 4 months potentially before we have a clearer idea of what happened in the markets this week.
My recollection on these things usually is it's almost like you never find out. You know, it's a little alarming that they can't figure it out. And when you talk about confidence, I mean, you look at the markets and everybody tells you that the ordinary investor has not gotten back in the stock market.
They're sitting on the sidelines.
And if you saw what happened this past week, would you invest in the stock market? I mean,
people have lost a lot of confidence in the system, and it'll be a conversation I think we'll be discussing going forward. Anthony Mason, Michael Santoli, thanks so much to both of you for being here.
A lot happens early on The Early Show, weekday mornings on CBS.